Welcome. This is India Market Open. We're taking stock of the futures and options space. Now, Friday was a day where we did see advances with the Nifty climbing by as much as 2%. And we also saw a little bit of unwinding as far as futures is concerned. Moving on to the bank Nifty, again, a 1% up move and not too much change as far as the open interest goes. But if you consider the options market at the moment, well, what we're seeing, perhaps on expected lines, a lot more writing around puts because of the 2% up move for the Nifty. Based on that, in terms of your overall open interest distribution, what we are keeping an eye on is 23,500 call is where we are looking at a good amount of open interest distribution on the higher end, which could perhaps give you a little bit of, resistance on the higher end, and lower end 23,000 where we have a substantial amount of put writing coming through. So that would be your support going in, at least based on your overall option open interest distribution. But moving on to stocks, well, we are once again keeping an eye on longs from Balrampur Chini, LT Finance, Emphasis, along with that Indus Towers. All of them looking at longs, and among stocks which are seeing unwinding, short covering for two of your large cap IT stocks, Infosys and Wipro, Power Grid, as well as Reliance. So these are some of those counters that we're keeping an eye on. But let's move on and take this conversation forward. Now that the big event is out of the way, what do we do with these markets? Well, we are in conversation with Ajit Rambia of Ajira Ventures, who's joining us on the show. Ajit, good morning. Thank you so much for joining in. Once again, let's start off with your view on your overall benchmarks. What are you doing with them?
Yeah, good morning, Adam. Thanks for having me on the show. With a highly volatile market last week, things seems to have settled down. So market participants and markets will try to align themselves with the outcome of the Lok Sabha election with the coalition government at the center. There will still be a sense of skepticism with regards to the form of the elected government. Traders should focus on stock-specific action, as we have seen multiple sector rotation in the last couple of trading sessions. Also, traders should avoid building over-leveraged positions and chasing prices and adopt a buy on dips approach instead. The IT sector is acting as a pillar and supporting Nifty strong levels. So now looking at the indices, we have a support in Nifty at 23,000 levels and a resistance at 23,500 levels, looking at the open interest levels. And for Bank Nifty, we have a support at 49,300 levels and a resistance at 50,500 levels.
All right. Okay, Ajit, so let's move on and talk about a handful of counters. What's the first name on your radar?
We have BPCL. BPCL has declared a bonus in the ratio of 1:1, and the record date for the same is 21st June. So we have a bullish view on this counter. We can initiate a bullish call spread where we buy 1,610 call at 19.90 rupees and sell 1,680 call, which is the target price, at 4.45 rupees. So the cost of this strategy is 15 rupees to earn. If the price reaches up to 680, we can earn a 55 rupees in it.
All right. So that's as far as BPCL is concerned, and a spread coming in. But what is the other counter on your radar, Ajit?
Yeah. The other counter is Wipro. So owing to the booming IT sector, this counter has picked up really strong. We can initiate a bullish butterfly strategy where we buy 27 June 490 call at 10.35 rupees, sell 27 June expiry 510 calls at 4.80 rupees, and hedge it with buying 27 June 530 call at 2.30 rupees. So the total cost of this strategy is near 3.05 rupees to earn 20 rupees, which is on the table.
Okay, Ajit, just to understand the risk and reward as far as this Wipro butterfly is concerned, can you take us through that as well?
Yeah, so right now it is placed at 485. We are buying one ATM call of 490. We are paying 10.35 rupees. Our target is 510, so we are selling two calls at 4.80 rupees to cover the cost of the call bought. And as we are short two, we hedge it with buying 530 call. So we are risk-free by paying 2.30 rupees. So if it closes at 510, we earn 20 rupees.
All right. Ajit, so that's as far as your calls are concerned, as far as coming down to BPCL and Wipro. Just want to ask you a broader question now. As we move into the next few days, as we move in towards the end of June, of course, we're seeing an abatement in volatility. Volatility, which has already come off quite substantially since the outcome of the general election. Moving in, do you think at this point in time, strategies like short strangles or short straddles would be better placed given the kind of premiums we still have at the moment? At what point in time do you think that the premiums are shrunk enough that going short on these strategies would not work out?
We generally play this short straddle and short strangles in the later part of the month. So after 15th, we generally every month play this short straddle and short strangle. And as this event is out, I think this is the right time to go for short straddle and strangle, as we are getting very good premiums. But these premiums will fall down drastically going forward. So better be quick in it and imply the short straddles and strangles right now. That's it.
Okay, so what Ajit is in fact at the moment saying is that this is perhaps a better time to go ahead and sell those straddles and strangles because your volatility is relatively higher at the moment. And later on perhaps in this particular expiry, you're going to see a shrinkage, but even as we see your volatility come off by quite extent. Ajit, on that note, taking a moment to thank you for joining us and taking us through your views on the markets and of course fielding a handful of out-of-syllabus questions as well. Overall, the other big takeaway here is that because of the fact that the big outcome of the election is out of the way, I reckon the next big event will come through in July. That's where we see the union budget. Now, a lot of positions, a lot of positional, bids will be placed based on that particular event, and that perhaps will be another crucial one. For now, while we do see an abatement in volatility going into the next few weeks and perhaps next month, that's where we start seeing an increase towards the volatility as far as July is concerned. So that is something also that one needs to keep in mind. At the moment, do remember that even back in May, we were seeing a substantial amount of positions being built in July, and keeping in mind at least some of your positional traders were already factoring in to a certain extent the outcome of the general elections and looking forward. So that's something that a lot of traders, option traders out there will be bearing in mind. Well, that's what we have in terms of your overall futures and options picture. With that, it's back to you.